Ladies and gentlemen, K Kim here. Welcome to the market update. I hope you guys had a good week trading this week. Market tumbles a little bit here last couple days. Let's talk about that. Tonight we're going to be talking about Spider, Russell 2000. And also let's do Apple, Google, Intel, eBay, Starbucks, and Visa. Followed by silver. And we'll end the video with the Bitcoin as we always do. So we got a lot to talk about, and it's all coming up right now. So let's start with the Spider. And what I want to do is actually let's kind of follow with what we've been talking about on our daily update. And so you can see that, and that's exactly what bears wanted to see is gapping it down. And you can see that here. Let's actually make this. We have island top reversal here on the 65-minute chart. So let's make that into purple. Let's do a little bit of maintenance here. Get rid of that, rid of this. Okay. Right, and then what I want to do, put that here, maybe there, and let's extend this. Also, we've been tracking that rising pivot, right? So let's extend this here, right? And here's few important moving averages they're going to keep an eye on this week or next coming week. You can see that since the April 1st, and April is a huge month, and you can see that since the lows of April 1st, and that is a 20% up move in just 1 month, and that is a monster move. And so we had a very, very good move for the buyers for the month of April. Starting this month out, month of May, we are seeing a pullback. And we are seeing exactly how bears wanted to see. We didn't want the bears to march it down because there are too many supports. Instead, bears closed the day yesterday like this, right there. We gapped it down, turned this into an island. So you know what we're gonna do? We're gonna put that right there, so we know that that's an island top, right? Keep in mind though, we did see island top before, so right there, that was island top. We have a very, very similar sequence happening right now. That's island top. That's island top. We gap down. We continued lower throughout the day. And last several hours, we kind of hung around there, right there. And that was the vicinity or right on the level of where that longer term moving average. This is a SMA. 70 SMA on 65-minute chart, and that's where we found support here, right? Again, the lows of April 1st and 2nd, 3rd, that's where 20% came about. So we cannot ignore this moving average. This moving average has impressive resume. Not only that, April 21st, we saw an island top reversal. An island top reversal is probably the most, most lethal short-term reversal pattern, right? Especially if we see a follow-through. So when we saw that island reversal, and you can see that, it actually found support right on that rising longer-term moving average. We have to pay attention. And from that level, April 21st, we saw additional 8% run. Now we are back at it. So that was 21st, about 10 days later. We're just right on that vicinity, right? And so here, I also added this longer term moving average. We'll talk more about that. We'll talk more about that on the next week daily updates, right? So right now, these are the things we have to keep in mind. Do we have island top reversal? Yes. Did we see a follow to the downside? Yes. So there's a lot of selling pressure there throughout this day. We didn't see much of a bullish move. We just kind of hang around last several hours, right? But we are right at this line. There's no coincidence that we saw island top and we're hanging around right on that moving average, right? There's no coincidence that we're hanging around in that vicinity. So we want to still, in the micro term, yes. In the very, very short, in just 1 day pressure, we did see a lot of selling pressure. In the micro term, very, very short term of things, I want to give benefit of the doubt to the sellers. If the sellers can continue early on Monday, right? Coming Monday, maybe when they can gap it down one more time, they'll be better. But if the buyers want to take control again, they have to utilize this longer term moving average, because this long-term moving average has a strong support capability, right? And so let's say, if we find support in that vicinity, there's a good chance that buyers want to bring it back up here and fill that gap. Last time when that happened, buyers actually gapped it up and came and filled that gap, pulled back, and then made a run. So maybe something similar, that's what the buyers are looking for. Sellers, maybe bring it down one more time. There's a lot of support in that vicinity. Now we're getting back. If the sellers bring it down to 277, 278, 279-ish area, we have that rising pivot. And that's a very, very strong pivot coinciding with the gap area, which is also going to serve as a strong pivot or strong support. I put in additional moving average. Why? This moving average, I believe, is SMA, 120 SMA. That's where we saw this drop back in March 31st, right? Now that prior resistance now turning, right? Because that long-term moving average was declining for sure. Now it's rising. So if this moving average is lost, bulls have this moving average here. We got that gap area, 277, 278 area, coinciding with that rising pivot, that moving average just right there at 277. If we come down to 277, 279, 280-ish area, I believe there's going to be pretty strong support. And that's for another update, and we'll kind of keep you guys, and I'll update you guys on this coming on Monday there, and just quickly on a daily chart, and we'll move on here. I don't want to spend too much time. Let's do a little bit of maintenance here, right? So let's turn that, so we have that island reversal there. So let's do this. Let's make that into purple, right? So now you can see that that was the death cross, right? We got that longer, like shorter term, longer term moving edge crossing there. Yeah, I believe they are. So they are 20 EMA, 45 EMA. 20 EMA and 45 EMA. That's what they are. That's 45 EMA and that's 20 EMA. And then we did see that golden cross there. And you can see how, when we did see that kind of island type reversal here, and that's where that 45 EMA held. And that was a vicinity where that 20 EMA, the 45 EMA hanging around, right? Together. And I think we talked about that last weekend. And that's where we found support a few weekends ago. And we ran higher. And you can see that we're now near that vicinity once again. So what I want to do is I want to put these levels here, 278, 271, because that's that level where the gap is. And we got the 20 EMA there and 45 EMA in that vicinity, right? Keep that in mind. We still have higher lows and higher highs also. And I also want to put in this, and that's that rising pivot that you were seeing on the daily chart here. So, I forgot to also mention though here, I want to actually talk about this. Where you can see here, you see that longer, you see, we've been talking about this moving average, right? You know what, let's highlight that. I think that will be the key moving average going forward. And I think bears really want to break this lower right away. No hanging around, man. No fizzling around for, a couple hours or a couple days. Because remember what I said, the fizzling around, hanging around, that's how bulls like to operate. Bears don't like that. If you let the bulls hang around, float around, sooner or later, they're going to come back, they're going to bring it up. But this moving average is very, very important because, look, we're back at it. There. Do you guys remember last time we did the update? And I showed you the exact chart, and that was April 21st. So here, let's look at the performance. every time we saw that pattern, right? From here to here, that's a 17% performance from April 21st to that peak, right? That's what, 8.6% performance from here to there. I'm not sure, right? That's for another discussion. That's for the daily update for next week. But I want you to know that in the short term, we are hitting oversold level, similar to April 2nd, similar to April 21st, here today on May 1st. I actually think the best bet for the bears is that they have to gap it down. They have to gap it down on Monday. If not, that support is pretty strong. Keep in mind, we're still cultivating higher lows and higher highs. And so I think the best bet for the bears would be just gapping it down on Monday and deal with that 277, 278 afterwards, after gapping it down. But if the buyers coming here, we see a gap up, right? Any kind of strength, especially we're seeing that level right here, the oversold level that has been so strong, right, on the moving average, right, that we've been tracking this entire time. Any kind of bounce, any kind of gap up, I think then we're gonna for sure get up to 2. If we see a quick gap or a quick bounce, we're probably gonna see at least the retest of this gap, which is at 285, 286, potentially even filling that gap, right? So that's something we'll update. We'll follow up on that on Monday, right? Let's go to Russell 2000 here real quick. So this is Russell 2000. Russell 2000 actually done a good work as far as a cultivation is concerned. I get it. You know, Russell 2000 is down quite a bit, and it's been much of a lagger. So you can see on the S&P, we're down, you know, about 10% year to date. Russell 2000 is still down 20%, 21% year to date. So a lot of work needs to be done. But we've made some progress here since the lows. We did about 40% move, and we are establishing higher lows and higher highs here, right? Even though, you know, we're not seeing a big buying pressure move like S&P or the NASDAQ, it is slowly cultivating higher lows and higher highs. We're back at this level. That's a prior resistance with new support. Guess where we found support? Guess where we kind of hanging around today on the Russell 2000? It's the moving average cluster. Do you guys remember what I said on the spider? Remember here. Where was the spider found support back? You know, let's get rid of that because that's, you know, we can look at that on the 65-minute chart. Where do we find support back in April 20th? The moving average cluster, right? We got those two moving averages hanging around there. Remember, we did see a bullish move, and then we faded, and then we gapped down and turned it into an island top, and then we faded throughout the day. And then we brought it up. We hit Russell 2000 is actually mirroring that right now, right? Russell 2000 is mirroring that. So here, you can see there's down gap here, and there's another gap here. So we made a move. We're pulling back. We're hanging around in that cluster of that moving average. And it's interesting because that you know 45 EMA been acting as a resistance here for quite some time. You know, since what? Since we saw that thrust, and then, you know, that was what, April 9th, we were not able to gap back up for another 20 days. So for 20 days, we were consolidating below that, you know, 45 EMA moving average there. So that moving average was kind of preventing it from going any further to the upside. When it finally broke out, we see 2-day follow through, and then we pulled right back, right? Pretty much, you know, making those gains disappear. That 3-day gain and 3-day losses, right? Boom, boom. But I think, and a lot of people think that when you see something like that, okay, well, 3-day gain is gone now. It's actually not like that. You have to see it as a cultivation, some sort of a development or establishment, because a lot of times, especially beaten down, you know, sector or the index like small caps, you know, it's going to take its time to get up, but as long as it can able to cultivate higher lows and higher highs, you know what I mean? They're trying to build some kind of momentum here. And a lot of times when double bottom gets printed, like if you're wondering when the Russell 2000 is going to come down and make new lows, or at least come down to these lows, well, a lot of times when that happens, usually they shoot up, like it just goes straight up, maybe a little pause or something like in the middle of it, and then comes right back down, and then just crashes right back down, and then, you know, and then makes that double bottom before going higher, potentially bottoming out, or, you know what I mean, some or different scenarios. That's what everyone was looking for, you know, the entire month of April. I mean, I think everybody was looking for the taste. A lot of bears, right? I think that's what a lot of people are still looking for that. But when you see this slow kind of grinding cultivation, I think it's a little bit harder because now we have established higher highs and higher lows here. So I think, and I said this, you know, couple weeks ago, that for S&P and the NASDAQ, for the semiconductor to make the fresh lows, very, very slim chance in my own opinion. If you are looking for that, hopefully it works out for you. But in my opinion, I don't think that's going to happen. On the Russell 2000, now that I saw Russell 2000 had a big move here, because I think in 3 days, that's about 10% move in 3 days. You know, yes, it came down and, you know, it raised all those gains, but the establishment, that cultivation is there. And that's important when you're looking at these indices with higher lows and higher highs. And then now these moving averages getting retested, right? Very, very similar look to what we saw. Because, I mean, that's kind of what it looked like. Just about a week ago, right? About 10 days ago, that's what it looked like on the S&P. Look, you see this is S&P. We got these moving averages here, right? And here. See? So this is S&P just about 10 days ago, just about a week ago, right? We got a higher high, higher low, right? And then you see that moving averages retest, right? And then you see that's what happened, and then you continued higher to make higher high there. And I think the Russell 2000 is what it looks like, how S&P looked like in April 21st, in that vicinity. So I think I want to give benefit of doubt to the buyers also in the you know, maybe obviously, you know, currently we do have short-term selling pressure. So I think buyers want to see not getting supported, like this level not getting supported. You know, sellers don't want to see that. Sellers want to see continuing to lower, possibly even breaking below this moving average. Buyers want to see a jump from here, right? Let's go to Apple, because I think there's a lot of commotion about Apple's earnings and whatever, all these things, but Apple's barely down. I mean, yes, at one point it was up quite a bit, came back down. There's a lot of volatility, but Apple's been holding up quite well. You know, it's not too far away from all-time high. I mean, even just from yesterday, you know, we were only about 10% away from all-time high here. And also, here, let's do that. Let's put this here, that vicinity, because I think that was a prior resistance, and we're kind of retesting as a new support, right? So what I want to do, there's a gap area, so I'm going to put this actually a little lower, and there's a little gap area also. So I'm gonna actually put this. I'm gonna do it like that for now. Let's see some of this. We got. Let's leave at that. And also, you can see in Apple also those moving averages got retested, right? The moving average is coming down, act as a resistance there. That's a resistance also, kind of resistance here. We finally thrusted higher, came down, retested it, moved there. We're pulling back a little bit, and not a big deal at all. I mean, not a huge deal at all. I mean, Apple's down about 1.61%, But if you look at like weekly chart, monthly chart, there's no damage that's done here. Apple and the NASDAQ also, I mean, the whole tech sector is looking very, very bullish. And I believe the tech sector, the NASDAQ, and the semi conductor is going to continue to lead throughout this year. And Apple looking, despite the fact that we're seeing some fade today, looking very, very bullish. Sellers want to, see if if we can see a continuation. That is a shooting star type of candle. It will be more of a shooting star candle if we were actually seeing something like that, like this. Instead, the body is actually lower than the previous day's candle. That qualifies more, more for a bullish flagging pattern. But you guys know that I don't really trade off of that. But if you're concerned about short-term sentiment of things, that's more of a bullish flagging type of pattern, potentially continue higher. But we do have a gap here. Maybe that's what bears eyeing on. Bring it down, maybe fill that gap. But all these moving average, we want to continue to give benefit of doubt to the buyers, especially in Apple there. Let's go to Google. I also own Google and Apple, and all the stocks that I'm going to be covering today. I own all of those in my portfolio, and I've been buying those since the lows. Actually, Google, I've been actually long on Google since the 2018. No. I was long since early 2019. I was actually buying Google this vicinity here. And it's because I'm a long-term investor, I held it. And I didn't close out any of my positions. It came down. All my gains were evaporated, yes. And then I bought more, I believe, in this vicinity here before that gap up. And I bought twice here and here. And I'm holding full. So we have that big earnings gap, and we're starting to fade here. And it's not uncommon for Google to see a fade after a big gap up. It's not because of the current sentiment or because the COVID-19. It's none of that. It happens almost every time. So I remember here, this is what happened. So you see even here, I was actually long on Google, I think somewhere at $1,000, somewhere in this vicinity. And I was buying it, and then that thing gapped up. I didn't add because, when you go back and study the Google history, a lot of times when there's a huge gap like this, usually comes back down and it fills it and then continue. And there are a few instances where it continued on, but more often than not, when you see a pretty big sizable gap on Google, it usually likes to fade. So I actually bought it, I waited, it pulled back, and I bought more. So here I saw a gap up, right? And I'm waiting. I was like, okay, you know what? If this thing starts to fade, I'm going to start to probably add more. I'm not sure exactly where, but this time around, though, I feel like we're not going to come all the way down to fill the gap. I think we're probably going to stop at around 1282 or something like that. That prior resistance seems pretty strong because that's also pretty strong pivot. If I go out a little bit, you can see right here, this vicinity I'm talking about, right there. And that was this pivot here, that was here, that was there, that was here. We hanged around for, it looks like probably the month of April. So that's a pretty strong pivot. So I think I'm going to pull back to about 1282. I may buy some at that point and before going higher. And that's kind of what I'm thinking here. Let's go to Intel. Intel, I have quite a bit of large holdings on Intel. I've been actually accumulating longs since 35, and I've been actually writing articles on it and updating you guys. So I'm actually long on Intel since down here. But anyhow, I have not closed out any of my positions, been buying all these dips here. And currently though, we got these clusters hanging around. We got these clusters, and clusters, man, is actually a good thing. Remember what I said? That's how buyers like to operate, right? They make these clusters to absorb shock. Like it don't want to see some crazy down move like this we've seen in early March. So by giving these clusters, which is also known as consolidation or resting pattern, sideways move or whatever, not only we're just clustering, but it's clustering in a way that we're cultivating higher lows and higher highs, and that's a heavily bullish sign. You know, I want to continue to give benefit of doubt to the buyers here. And I wouldn't expect, like, you know, just because it breaks down a little bit or breaks down a little bit. I mean, if it breaks up, breaks down, I don't trade off of that, because the market is so clever where if you're trying to trade off that, it's going to go up here, looks like it's going to break, you know, break higher, it's going to fall right back in. How many times you've seen that happening? Where you're going to say, oh, you know what, I'm going to go long right now, place my stop here. It's going to come down, take your stock, goes right back up. Or if you're trying to short. So you always want to look at how the trend is developing, how the overall sentiment is looking, before just drawing lines and I'm going to go long if it goes higher. I'm going to go short if it goes lower. That strategy usually doesn't work very well. You might get lucky here and there, but if you keep doing that, usually sooner or later you might get burned. And if you get stopped out too many times, also what happens is that there's a psychological damage that occurs. And you know how many times you got stopped out several times, right? And you're like, you know what? I'm sick and tired of this stupid stock. I'm done with this stupid thing. And then you like throw it away, right? Like you've been trying to trade Intel, it didn't work out. You threw it away. Like I don't want to look at this ever again, right? You're mad, right? You're mad about it. And then so like you threw that, you delete that off of your charts and off of your watch list, and you're like looking for some other setups. And then like 6 months later, you come back, look at it, Intel's like up like 80, right? How many times you've seen that? That's kind of what I mean. Like you're trying to low along here and trying to place a stop there, and you get stopped out there, you get stopped out here, and then later on you look at it and it's up a lot, right? That's why you always want to you always want to see, you know, how the market, how the stock is moving, not only in the short term but in a big picture of things. Right? I mean, if I actually zoom out, and even though there are a lot of shenanigans, look at these like up and down moves, but it held very well looking at things more of a primary term perspective, right? This is kind of what I mean too. Also, you can see that if I actually try to draw this perfectly, it got slightly lower. You know, it got slightly lower. So you're looking at this, you know, on the COVID-19 thing, and you know Intel's dropping, and you're like, oh my god, we just broke below the support, man. I'm gonna close on my positions, and we're up here, and you know, got right back up, and that's also damaging when the market goes up without you. But I also want to give benefit of the doubt to the buyers on Intel. Right now, it's kind of a mess. Again, clusters, but I think we're gonna break out to the downside. But we want to make sure 5630 holds these levels. Worst case scenario, you know, maybe we can come down, fill this gap, and that part maybe act as support and continue higher. Because remember, there was gap here. You see that gap? We actually gapped up. And the next day, gap got filled. When gap gets filled, it acts as support. We thrust it higher. So this gap has been open for quite some time. So I think that gap area is going to act as pretty strong support. Not only that, we got that moving average in that vicinity. Let's go to eBay. I also own eBay, and you know I've actually had eBay since like down here, late 2018 or something like that, and I held it anyway. So such a big V-shaped move. Actually, if we go to weekly, you get a little bit better picture. So you can see that was the level that we held. That's the weekly, right? That's where we found support. We got a pretty solid double bottom there, and that's the neckline. So we're hanging around in that vicinity, right? So obviously, eBay wants to break out of that, but I think there's some profit taking occurring a little bit. That's why we're kind of pausing here. Obviously, the stock doesn't go straight up. We did have a straight up move, and you can see how it hangs around, consolidate for a couple months before going higher. So that's what we're gonna see here, I think, and then potentially. We want to see eBay breaking 41, 45 area before it can actually get into a prolonged uptrend. I think eBay is getting ready for some big uptrend move as long as market follows that direction to the upside. Let's go to Starbucks. Starbucks is a new position that I got into around 67, 68 here. But I think you can see here. So I think the good news about it is this is a neckline. got up, came down, higher low, got up, higher high, pulling back, potentially higher low before going higher, right? And that's kind of like Starbucks likes to make a move here. That's what I'm saying. Low, low, higher high, low, higher high, higher low, higher high, right? And we've been talking about this pretty much in the last several weeks, right? We've been talking about that on the Russell 2000, on the S&P, higher lows and higher highs. We see a big decline. We see a cultivation, and then out of nowhere, that thing just goes crazy, right? And that's kind of what we're happening here in Starbucks also. We got higher lows, higher highs happening there. We got all these, some of the longer term moving average is still kind of curling down. That tells you that in the longer term things, the trend is not existent, right? That's true because we got up, we came down. So we're still moving sideways if you're looking at things a long-term picture. And that's what these long-term moving average represents. But when you look at maybe shorter-term moving averages here, they definitely saying that we are finding some momentum here. So I think, let's put this here. We just filled the gap also. Actually, I just noticed there's a little bit of gap that remains because that's where it opened, that's where it got up. So, but 71, 71, 77, 70, 72, 70, 02 will be important level. There Visa also. I recently acquired Visa. Precisely, I remember this one because it was recent. Precisely around 159, 160 on this dip here. Why did I buy that dip? Again, low, higher low, and then we cultivated higher high. It pulled back, and then it came to the gap area. And I've been talking a lot about the gap area, giving you guys levels. So when it came to retest the gap area, I bought that dip right there. So that's why I always keep track of these gaps. We got that little bit of gap there. Also, we're pulling back, but here also we got the higher high, right, and higher lows. It seems like that has been a theme throughout this entire month of April because we really seen that kind of that momentum shifting to the upside with the high lows and higher highs in the month of April. Because in March was still, the pressure was still very, very heavily skewed to the downside. You know what I mean? Like after a huge decline that we've witnessed in March. So I think even with the brief move, I think everybody was still very scared, very much fearful that we could potentially make lower high before that thing plunging and continuing lower with the downtrend. But we're seeing something different, you see. We're seeing something different. Let's go to silver. I know we've been covering gold, but silver, when you go to monthly chart here, you can see that gold is somewhere here, somewhere up here. It has already broken out this 6-7 year, base. And we're hanging around. Gold is hanging around up here. GDX is hanging around up here. Silver is very late to the party. But I actually think silver is going to join the party sooner or later. I'm not sure how or when, but sooner or later it's going to. But we're hanging around that vicinity here. We did cultivate that low there. A little tiny low, higher high there. Consolidating a little bit. That's a bull pennant pattern, right? But again, I don't go by that as far as, because these patterns can fail. So I've seen it fail so many times. So I'm really going by, I'm bullish on silver. I own silver. But because I see gold and miners, GLD and GDX, they're all up there. I think silver is also going to join the party. In the short term things, though, we want to see this level holds. Even if we break lower, maybe we can do a little bit Fibonacci there. Even if it breaks lower, I think, if the 50% retracement, some of these levels is going to act as support. We do have a pretty, that's kind of an island. Silver is pretty gappy anyway. So I don't want to put too much weight into this, but that's in itself. We got a gap down, gap up. So that's kind of we do have island top reversal there, or island bottom bullish reversal, right? And so if we do come down, potentially could act as support there before going higher. But I think silver is going to start to catch up with its brothers and sisters with gold and GDX and start to make its move there to the upside. One last one, I'll let you guys go with this, Bitcoin. So we've been talking about Bitcoin, and you can see how last time, what we covered was that Bitcoin was in a downtrend, right? And I talked about how, I want to give benefit of the doubt except the fact that this might be in a wild card. Remember that? And that's important resistance area. We're hanging around in this vicinity. I want us, remember we said, if we see a move to the upside with volume, which we have, there's a good chance it's gonna come up and fill that gap. And I gave you guys that gap area. So there's that gap area there, but the longer term moving average is seeing a little bit of pause. So it looks like we actually didn't, continue lower, but we hanged around there. This is kind of what I mean also. You see that thing plunged, hanged around. You see what I mean? That's what I've been saying the whole time, hanging around. You let bulls kind of hang around like this, that they're gonna, if you let bulls hang around, float around, sooner or later they're gonna bring it up. You gotta go up, bring it down. That's bears. Comes down, you go up a little bit, hang around. You don't ever let bulls hang around for days, and they will bring it up. So the gap area here, so if we can stay above 809 or something like that, there's a good chance we, but if the gap gets filled, probably gonna act as short-term resistance. But I think there's a good chance maybe we can get up here, maybe retest some of the resistance. If the Bitcoin bulls really want to see this thing turn around to the upside, gotta get to 1347. We gotta reclaim 1347, pull back a little bit, cultivate higher low, and break above it. If we see something like that, I might even go long on Bitcoin at that point. Or maybe if you want to go a little early on anticipation of breakout, it's a little bit riskier. Go long somewhere here, and then maybe add a little bit there. So then maybe we have some kind of an inverted head and shoulder, reversal to the upside. Until then, trend is down though, but we do have a short-term momentum going here. It looks like potentially a trap, and we'll find out more about that. So, well, that's it for me today. So let's see how the market behaves going into next week. I'll come back to you guys on the lockdown daily update on Monday after the market closed, and see how this market is dealing with some of these levels that we just talked about. Got the moving average there, some of the gap area. This actually, I didn't mention it today, but there was a little gap here, that up gap, that was actually filled. So that's why I think there's a slowdown there. See, there was a gap here, and that just got filled. And it's not a mistake that we hung around there, especially with the big gap down. You would think it's going to just have a big flush today. But the gap gets filled, and that acts as strong support, or at least a short-term instant support, and that's kind of what we're seeing. So let's see how it plays out. We'll go from there, right? You guys have a wonderful weekend, and good luck trading next week.